Stories. It's time now to tell you what's moving and shaking in the market. So all the stocks which are reacting at this point. Ekta, let me start with you because it's the banking stocks which are top of mind. How's the Bank Nifty doing? It's down quite significantly after the policy.
Yes, in fact, the Bank Nifty is down 1.5%, but it's the PSU banks which are down even sharper. So that is expected, however. So the PSU banks down around 2%. Now, in terms of the RBI, they have cut the repo rate by 25 basis points to 7.25%. This is the third rate cut that we've got in the past 5 months, and it's a total of 75 basis points that the RBI has cut since the start of 2015. Now, in terms of what the rate cuts have been or passed on in terms of lending rate cuts, we've only seen it to a maximum of 25 basis points, that too after the RBI had nudged the banks post the April 7th policy. So in our conversation with SBI as well as Bank of Baroda, they did mention that it is a stage which is set for banking, for lending rate cuts further. But however, the ALCO will decide when and how much. And the likes of Bank of Baroda said that maybe it could be expected in the next 2 to 3 weeks. In terms of the inflation, what really has possibly spooked the markets is the fact that, the RBI is possibly not going to act in terms of further rate cuts anytime soon. They've given 75 basis points. They want to see transmission or further transmission. And besides that, they have mentioned that they expect inflation to start rising. So up to 6% by Jan 2016 versus the projected 5.8%. And the biggest uncertainty for them going forward will also be the monsoon, and the upcoming decisions will depend in terms of how the monsoon pans out, what the government can do if in case it is a below average monsoon. So policy will continue to be data contingent. In terms of a couple of bank-specific statements, the RBI governor did say that they will look to announce a base rate framework and bank licenses by August end. And the banks are aware of asset quality issues. It must be resolved at the earliest. And something on bank recapitalization or capitalization, which is required from PSU banks. That is something that the the RBI governor did mention during his press conference. But that's on the Bank Nifty. Hopefully it will recover at some point in the day. But we have Mangalam joining in on Hathway. Mangalam.
Well, that's correct, Ekta. Hathway caught some loose connection, down about 9% in the last 2 days since it released its fourth quarter numbers over the weekend. Remember, the EBITDA for this fourth quarter was down 24% at 31 crores, and the margins also narrowed from 14% to 11%. Credit Suisse wrote a note this morning. They say that the EBITDA was below expectations, and there's been no meaningful improvement in the monetization, as the cable EBITDA also saw just single-digit increase. In fact, the collection for MSOs or multiple service systems operator are well below the target levels given the problems of the local cable operators. And the only bright spot in these numbers are the broadband segment, which has seen a good traction, growing in revenues at about 47%, but also the launch of Reliance Jio remains a big event for this segment, on the back of which they've cut their FY17 EPS target by nearly 51%. They've cut their EBITDA targets by nearly 10%. They maintain the underperform rating, but they've cut the target price from 60 rupees to 46 rupees on that one. The stock under pressure today.
All right, and Adani Enterprises is in focus ahead of their scheme of arrangement, which will come into effect tomorrow, and it's been on a losing trajectory, this stock. Warinder, what more can you tell us?
Well, the stock has lost from 800 rupees towards 630, has recovered a wee bit today, around 1-2%, but is very volatile, throughout the day. The important thing is that the scheme of arrangement, where if you are a shareholder of Adani Enterprise, you get 4 different shares of different companies. You are entitled for Adani Power, Adani Port, Adani Transmission, which will get listed lately, and of course the residual business of the company, which is coal trading agri, which will be which will be the new Adani Enterprise and will be trading tomorrow. The stock has seen correction because of the huge open interest outstanding, and people were expecting that before 29th of May the stock Adani Enterprise may come into MSCI. Huge buying happening over there before that, but there was no announcement coming over there, so we were seeing selling pressure happening, the technical selling pressure happening over Adani Enterprise. Now clearly at about 630, 640, most of the market participants are believing that everything is in the price. If we look at the valuation of Adani Enterprise, nearly 80% come from Adani Port and Adani Power. People are expecting that when new Adani Enterprise, which is the coal trading and the agri business, which lists tomorrow, only that business will be valued around 100 rupees per share. The transmission business is left, which will be traded later. That could be around 20 rupees rupees going ahead. So you will see a huge volatility. Keep an eye on the total open interest outstanding because that could be important, especially in the last half an hour, 1 hour of trade. What happens to that? But as I said, from tomorrow onwards, the new Adani Enterprise will only have the coal trading business, the agri business of the company. Expect a listing around 110 rupees on that stock.
Okay, well, that's on Adani Enterprises. Stock is up around 3% but auto sales, some of them are not seeing respite, such as Hero MotoCorp. Sonia, tell us more.
Oh yes, Hero MotoCorp is the biggest loser on the index today, down more than 3% on the back of a very weak set of numbers, volume numbers in this month. So the total volumes for Hero MotoCorp have fallen 5% year on year because Hero MotoCorp has been impacted by the slowdown in rural demand. In fact, it has underperformed the rest of the sector as well. So while other players like TVS Motor, Honda, etc. have seen a marginal growth in their numbers this month, Hero MotoCorp has seen a degrowth. TVS Motor as well has entered into the slow lane. So the growth has slowed down to a single digit. Growth in May coming in only at 6% versus a 14% growth in the month of April. So total sales growth of 6%. Two-wheeler sales have slowed down significantly to 7%, and scooter sales that used to run at about 25% or so a couple of months ago have now slowed down to about 7% Bajaj Auto too has reported a muted set of numbers this time around. There has been a drop of almost 2% in its numbers on a year-on-year basis. However, the management believes that the worst is over, and the month of June, you could see better sales than the month of May. Finally, Tata Motors, lackluster set of numbers. The total sales up just 5%. Passenger vehicle sales have been good, but commercial vehicle sales have slowed down by almost about 6%. So tepid numbers coming in from the auto companies this time around.
All right, another stock in focus is Emami. They've announced a new acquisition. Although the stock has recovered about 3.5% from session lows, it's still trading about 5% lower. Pragya, what more can you tell us about what this means for the business of Emami?
Well, it is a big deal, actually, no pun intended. But, the company, it seems to have acquired the hair care and the scalp care business by the name of Kesh King. The acquisition would mark Emami's foray into the Ayurvedic hair care and scalp care segment. Now, the details that we have from the press release of the transaction is that, this is a slump sale of, all of the assets and the working liabilities of Kesh King to the tune of about 1,651 crores. So that is the consideration amount. Now, with this, Emami will take over the branded portfolio of the Ayurvedic medicinal oil, which is sold under the brand name of Kesh King. Apart from that, they also have an entire line of herbal shampoos and conditioners. They also have certain Ayurvedic capsules, etc., which Emami will take over as a part of this transaction, along with any kind of other formulations that the company was into. Now, the financials that we have on this acquired entity, which is Kesh King, is that the products of the company are sold via almost about 5.4 lakh outlets across the country, and the sales and the turnover of the company for FY15 we understand is roughly about 300 odd crores. The reason you saw that dip in the stock, and it was rightly so, is because at least on the face of it, it looks like a fairly expensive deal as far as Emami is concerned. Now, the company has marked its foray into an Ayurvedic hair oil category. The hair oil category per se, in the last couple of years has been flagging quite a bit, except of the premium brand that we see, the premium end of it, which is growing, and this is really in the mid to the low tier segment kind of a range. From the pricing, we understand that the deal should have been done at roughly about 5.5 times a price to a sales basis. That's just about 1,650 crores divided by 300. Now, Marico, which is the largest hair oil company in the country, with a flagship brand of Parachute, is roughly trading at those valuations. So giving such a premium valuations looks like, fairly steep, at least at this point of time. We don't understand, from what we've seen of Kesh King on TV in terms of their branding and advertising, you largely see more hair oil ads. So we don't know at this point of time how big their shampoo or the tablets franchisee is. More importantly, this brand is also about 5 to 6 years old, so there's no novelty factor in terms of acquiring into a fast-moving kind of a product range. Apart from that, on the financials front, Emami is throwing a free cash of close to about 400 odd crores on a per year basis. Plus, the company has 350 crores worth of cash on its books. So if you account for that, Emami will probably have to subsume debt of close to about 700 to 800 odd crores. So from a debt-free company, Emami will have to, subsume debt that will change the nature of its balance sheet, which probably should be a concern area as far as the analysts are concerned. Had the company marked its foray by way of acquisition into a fast-moving category, that should have been taken well by the street, but this inorganic acquisition looks expensive and in a slow-moving category, not looking very exciting, at least at this point.